Hey, welcome back to Investment Education Sunday edition. It's January 26th. We're going to be talking a lot about this enormous, probably the biggest week of earnings coming up starting tomorrow, January 27th. We're going to go over the economic calendar and we're going to look at a technical analysis of some of the big companies reporting earnings this week. Before we get started, please take the time and press that like button, subscribe to the channel, and this video is for educational purposes only. I'm not a professional stock trader, right? This is my opinion. So please take that with a grain of salt. You should never listen to somebody on social media, YouTube, any analyst. You need to dive in, make your own decisions, investment decisions, and just educate yourself. So let's go ahead and get started. Monday on the open, we got SOFI, a very talked about stock past few years since it's even IPO'd and it's taken off. And we'll go ahead and look at the charts real quick on SOFI Technologies. All right, so SOFI, we're looking at the 5-year here, kind of blown back up, right? My concerns with SOFI is you start to see folks, this is the new banking space, no brick and mortar shops for SOFI, right? Not going to really get into the technicals, all right, but the technical details of the stock itself, but a lot of hype behind this, all right? The P ratio, discounted cash flow model, everything's astronomical right now. The price to sales is through the roof. Price to book, not too bad, but there's just a lot of hype on the stock right now. Obviously, in a gamma squeeze type situation, you can see back here at a triple top. Right now, I do not have a position in SOFI, but let's look over in the past 3 months where the Fibonacci lines come out, right? So if they do, crush earnings, raise forward guidance, you could see the run up right to the next Fibonacci 2058. And then, it could take off from there. However, you see if they meet earnings expectations, maybe fall back to that, $17 line, or even, this company needs to grow and it needs to justify its valuation right now. The RSI is still cooking on the 3-month. All right, so if they miss earnings in any way, shape, or form, or make any bad forward guidance, you're going to see retracement likely back to $14, maybe even $13.50. And then potentially sell off after that, right? The American consumers, what's driving this, if you see folks start to, use buy now, pay later services, they start to default on credit cards, SOFI is going to take a hit. High risk, high reward type stock. Trading options at this point definitely does not spark my interest. Got to check out the implied volatility. But yeah, that's SOFI. Let's go and hats off to those of you who got in earlier this year. Hopefully you took some profits along the way. But right now, this is a coin flip on where earnings can go from here. All right, next up, I'm gonna kind of just go through my favorite picks, the ones that I'm definitely gonna be watching out for this week. You got StarBucks after the close on Tuesday. I just seen an article about the Starbucks CEO getting paid millions of dollars, and he's on a hybrid work schedule. I think he takes a flight into work every day. And hey, that's what happens when you pay the C-suite. But if they do not meet expectations or beat earnings this go around, a lot of folks, a lot of shareholders are going to be questioning, what's going on? Why are we paying this guy so much money? The price of coffee beans skyrocketed over the past several years, obviously affecting the bottom line of Starbucks. So again, stock's been up, down, all around. Pretty much if you invested at the top back in 2021, you're not even close to break even at this point. So very volatile stock. Let's look at the 3-month, right? A lot of enthusiasm after the, say the new administration hype, so on and so forth, just riding the wave up here. I would say hovering around this 98, 99 level. If they beat earnings, come in, raise forward guidance, you could see a run up to the 106 Fibonacci line there at the top. If not, you could see a sell off back to, I'd say, the support maybe 93 or lower. And if they absolutely just come in line and lower forward guidance, you could see this drop all the way back down to 86, even 84, maybe even 89. So another coin flip. I'm not invested in Starbucks at this time, and based off of these numbers, the P ratio, price to book, discounted cash flow, like it's in a tough spot right here, right? Because is the company going to buy back stock right here? Are they going to try to raise a dividend? You got to see the balance sheet and see what's really going on. This is just a top level chart analysis, but good luck to all your Starbucks shareholders out there. Definitely going to be an interesting Tuesday after the close for you. All right, Wednesday, huge day. Not only is the Fed going to be making their rate decision, but we have a slew of earnings. Before we go over Tesla and Facebook or Meta, let's take a look at the economic calendar. All right. So Monday, new home sales. Tuesday, durable goods, and Schiller Home Price Index, consumer confidence. So this couldn't be a bigger week for the U.S. stock market with just the reports coming out and the earnings coming out. You're going to get a real behind-the-scenes look this week on how the economy is actually doing and how these big businesses are actually doing. On Wednesday, one of the biggest days probably of 2025, I would say. All right, so you have advanced U.S. trade balance, advanced retail inventories, advanced wholesale inventories, right? There's a lot of tariff fears with the new administration coming in, President Trump coming in. So a lot of folks, who produce goods overseas, specifically from Canada, Mexico, and China, were front-loading, getting some goods inside the country to avoid tariffs. So let's see how these inventories have built up and if that's going to be a drag on balance sheet. You have to sell these goods, and they can't just sit in a warehouse, not turning product, right? Not turning SKUs. And then at 2 p.m., so if those of you remember the last FOMC decision, Jerome Powell came in pretty hawkish. The stock market was running up on the hype of the new administration coming in and basically threw some cold water on the fire, I would say. And it was a rough day in the market. The major indices were down a few percent, and some of the high flyers, I remember Tesla, I think, being down 8%, just on Jerome Powell speaking about the economy, inflation, and being cautiously optimistic. They're under the double mandate of keeping job numbers stable while trying to tame inflation. Right now, inflation is hovering anywhere between 3% to 2.75% in the United States, which is higher than the 2% goal. And then recent job numbers, jobs have been coming in pretty good, but paying attention to the news, a lot of companies are now laying off, government jobs potentially, are being let go. So it's tough to, and we're going to see, and we're going to listen to the comments. I'll definitely make a video on Wednesday, but Wednesday's a enormous day. Just all around, probably the most important day of 2025. It's going to set the tone, and Jerome Powell's comments are also going to set the tone. He's definitely going to be under some pressure from the president. All right, he made some comments earlier this week about wanting to get interest rates down. At this point right now, with the way employment is, there's I'll just make my call right now. I firmly believe they're going to hold rates where they are. We just need more data. We need to see how the first quarter shapes out for jobs. If unemployments pick up and the unemployment rate rises, obviously that's going to weigh down on inflation, right? If more folks are out of work, they're not going to be buying goods. Just came off the holiday season in the U.S., so folks are probably going to cut back. They're going to want to pay off their credit cards. They're going to probably want to tighten up their purses. So I think this first quarter, it's going to be interesting. If I had to make a call right now, I would say inflation is going to tick down, unemployment's going to tick up, and that's going to, pressure the FOMC and Fed Chair Powell to potentially cut interest rates earlier. Right now, I believe the interest rate is expected to be cut in June, but this changes every time we get a data point, an inflection point. Thursday, you got GDP, initial jobless claims. That initial jobless claims is going to be huge. So I guarantee you, Fed Chair Powell comes in and says, hey, we need to see more data. Right now, we don't have enough justification to lower rates. and that initial jobless claims the very next morning, could support a rate cut sooner rather than later. So pay close attention to that. And then Friday, PCI core, and there's your inflation data. Like, so that's going to be, this week is enormous. Definitely going to be making some more videos. Let's go back to the Wednesday earnings. So ASML in the morning, right? ASML is producing the machinery that, is putting out these advanced chips that NVIDIA sells, AMD sells, and that's driving, the AI boom. So pay close attention to ASML. They're richly priced. I was in and out of the stock over the past quarter, made a few dollars, but right now I believe it's richly priced, and I want to see how they do. So ADP, we'll see how they do. And going on to at the close, just an enormous day on Wednesday, right? Hopefully Jerome Powell doesn't, tame the market, and that'll kind of mute earnings for Tesla, Meta, and Microsoft. Just a few comments before we look at the charts, right? Tesla delivery numbers seem to be slowing in Europe and in China. The EV tax credit's going away. They have a lot of headwinds right now, right? The stock is priced for Optimus and full self-driving. I know version 13 seems to be a fan favorite, but at some point the numbers are going to start to matter. I believe we're a few years away from full self-driving rolling out. I believe the new administration is going to push for that. You might see Tesla have driverless vehicles in a few cities this year, but I still believe we're 2, 3, 4 years out from that getting fully scaled. And then we need to see the numbers. What's the profit on that software? And are they going to be leasing that out to other companies as well as Optimus? I think that's the big game changer is Optimus. If they can pull out ahead in robotics and start selling Optimus robot to work in factories, work on assembly lines, that's the big game changer. And been following Tesla now for about 8 years, and I feel like every few years there's always something that us shareholders, I'm not in the stock right now, was earlier, but we're always clinging on to. Elon's making promises. I believe in him. I believe in the company, but not at these valuations. And we'll take a look at that chart here in a second. And then Meta, also richly priced. Mark Zuckerberg, the CEO, mentioned that they were going to be heavily investing, and I have some scar tissue from Meta overspending. Bought towards the top back in 2020, 2021, and Wall Street just bashed the stock. The thing fell down, sold out, and then ended up buying back in at a great valuation. And then it's done really well for me over the past few years, but I'm not currently in the stock. I'd actually, correction, I have a small position, and very, very small. But right now, valuations are, maybe they're fair depending on earnings, but it's kind of too early to tell. And then Microsoft, right, have a large stake in ChatGPT, OpenAI, so rolling out Copilot. They have a lot of products. This is the Big Mag 7, right? So let's take a look at the charts real quick, starting with Tesla. All right, Tesla pretty much doubled since, let's see, the election. Let's go to the 1 year, right? So November 5th, right? November 5th, you could see the stock was at 249 and then basically topped out at 488. So a double. This is when Jerome Powell last spoke. Like I was mentioning before, stock sold off, consolidated. All right, let's look at the 3 month. Right, stock consolidated a little bit here. And now you're riding on, Optimus, full self-driving. Can they do it? And it's just a coin flip right here. We're going to need to see profits across the board. We're going to need to see a beat, raise guidance. Interest rates are crushing right now. If you want a new car loan, I know Tesla offers 0% APR in the first year. I'm not sure if they're still doing that deal, but the EV tax credit is going to be a killer. They're going to have to lower the price of their cars, cutting the margin. And folks are willing to take that bet because they see Tesla as a $10 trillion company by 2030, 2035. So they're willing to say, hey, stock gets cut in half again, goes back down to 200. I'll buy more because, Optimus and full self-driving, Tesla's the leader, right? And I can't put my hard-earned cash into Tesla at these valuations. I did buy back in a few years ago at a 100, sold for a nice profit. Yeah, am I kicking myself now? Yes, but look at these valuations: price to book almost 19, price to sales 13, 4P forecasted of 200, and even the current P, a trailing 12 month, is 111. So these are bubble type level metrics. And, I've seen the spreadsheets, I've seen the analyst calls, I've seen the big banks come in with these astronomical valuations. Hey, wherever you think Tesla's going to go, I think this is going to be one of the most watched stocks this week. All right, if they miss earnings, they lower guidance, you're likely going to see a fallback to the 367. If it can't hold that line, maybe the 375, 380. If it can't hold that line, you're likely headed back to 319, 300. And then once, if that happens, Elon, can't answer the tough questions that's asked on the earnings call. Who knows where the bottom is, right? And then if they come in with a Q2 or Q1 for 2025, another miss, then the stock could retrace all the way back to the 200s, even the 100s. My fair valuation on Tesla right now is about 150 to 200. If the stock got back to that levels, I'd be interested in buying again. But good luck to all you Tesla shareholders. I'm a big fan of the company. I'm just not a fan of the stock right now. So I wish you all the best. I hope you make a lot of money on this one. And if it does shoot up after earnings, I'll be rooting for you because, I believe this company is changing the future. It's going to change the way that everybody lives in the world. So good luck to you. Let's take a look at Meta right now. So blow off the top here. Stock's trading 647. Remember what I said before. I'm not even doing Fibonacci lines above this level, right? Stock's better priced than Tesla, right? Ford P forecasted of 28. Remember, right? If they crush numbers, add revenue, right? They own WhatsApp, they own Meta, they own the multiverse, whatever that is right now, and they own Instagram. So a major ad platform they have here. I've seen a ton of ads. I was just on Facebook. And I was just on Instagram, and you're just almost everything you see there is an ad. So I'm sure they're rolling in the money printer for ad revenue. So I don't expect them to come in with a big miss or even a blow off the top beat, but the stock's almost double of the average, P ratio of 15 for the S&P 500. So could be potentially paying double for what the stock's worth right now. But if they come in and crush earnings, remember what I said before, Mark Zuckerberg posted it on Threads. They're going to be pouring in billions and billions of dollars to AI. At these valuations, I have a very tiny position, but definitely good luck to you. This another company changing the world. Just think it's a little richly valued right now, and I'll be paying close attention to. If they miss earnings and they lower guidance, likely see a fall back to the 546 line right there, and then potential consolidation. And if they also, if you watch the Joe Rogan podcast and you see Mark Zuckerberg came on, they're changing their tune of DI practices. They want some more masculinity management. So who knows what's going to happen, but times are definitely changing. In my opinion, I think this bull run might be coming to an end. And, it'd be scary, if you bought 5 years ago, kind of when I did, and, I kind of bought up here at the top and then, sold when we got destroyed. I believe this was the earnings I sold off of, so I might have sold up here, watched the stock for a few years, and then ended up buying in the 80s, wrote it up to 575. So, a lot of buybacks, a lot of bullish activity over the past few years. But right now at these valuations, it's just tough to say, hey, is this stock a double from here? Potentially, but the downside risk. Here's a statistic I like to remember often. If a stock falls 50%, right? If Meta goes from 647 down to 320, right? You need to then. So now your investment's cut in half, 50%. For that to go back to just break even 647, the stock needs to double. You need to get 100% gain. So I'm being patient here with this one, keeping a close eye on it, and yeah, just at these valuations, it just doesn't spark my interest of I try to embody a value investor as much as possible, and this just is not where it's at. I'm a daily user of the apps. Definitely love the programs. Threads got a long way to go still, but good luck to all you Meta shareholders. I'm one of them. I have a very small position, less than 0.25% of my entire portfolio. But yeah, they have a fantastic balance sheet. It's just Wall Street's going to kick them if they overinvest in AI and they can't produce results. So, going to pay close attention to that one. Let's look at Microsoft real quick. Another one, just the valuations are insane, right? Blow off the top. Stocks pretty much almost at all time highs. A little bit of sell off, few percentage points off all time highs. Again, could you be seeing a double top here? I think this is just way too hard to call right here. If I'm a long-term investor, do I see in the next 12 months plus the stock, going up to 600 and giving me, can I just invest in the S&P 500, get an 8-9% gainer, or do I think Microsoft is just going to take off, or are they going to also overinvest in AI and not be able to produce results? In my opinion, I think these large language models are becoming a commodity. Recent news right over in the Asian markets, one of the companies, copying the Chat GPT model, right? So very tough call right here. RSI cooled down a little bit, but you're right in that middle zone. Paying up for Microsoft at these valuations is just, easy to look back, right? Hindsight's always 2020, but you want to buy in these major dips, and right now, just the stock is just not where I would put my hard-earned cash. Good luck to you if you're a Microsoft shareholder. But if Wall Street again turns on Tesla, Meta, and Microsoft, and you see these large hedge funds, these big time investors that have billions, right? So you're looking at a $3.3 trillion company, right? So there's got to be some value here, but at these valuations, I mean, same thing. Microsoft goes down 20%, you got to get a 30-40% gain to make that money back. So just not at these valuations. Love the company, love what they're doing, changing the world, but not at these valuations. It does not catch my eye. All right, IBM's another one I'm going to be paying close attention to, and then the last one I'm going to talk about in this video before I wrap up is Apple. But Southwest, another one you want to pay attention to. How is the consumer doing traveling? How do they see the traveling for 2025? You're coming up on spring break season, so maybe they're doing good. How's the summer season looking? So Apple and Intel and Visa, wow, just another big day on Thursday. So Apple's been getting beat up lately. I did have a short position, some put options, took profits on it. Apple's one of those ones that are just extremely tough to short. It's just embedded in the S&P 500. There is, recurring investments, pension funds just buying, and a lot of money just continues to flow to the stock. So if you shorted the stock up here, this is just a rare occurrence sell-off. Looking at the 5-year, stock's at 222 right now. If they miss earnings, likely going back to 190. Right? Remember, Warren Buffett was selling a lot at that point. I'm not sure if he's still holding. We'll see his next 13F filing, but Warren Buffett said, hey, at 190, I'm out. They're buying back stock at all-time highs. It's not what a value investor. It's not how, you manage capital the right way. So now, if they miss earnings, iPhone sales aren't doing good. It doesn't seem like they're innovating a lot from the AI front, robotics front. They stopped their electronic vehicle sales. So I don't really see a lot of tailwinds for Apple right here. But it's just one of those ones that's really tough to short. I'm not invested in Apple. I'm not even sure if I invested in it over the past few years when it was beaten down. But yeah, congrats to all you shareholders who've been hanging on. It's just right now, as well as the other Mag 7s, these things are just the PE ratio on this guy. The law of large numbers, when something gets this big, it's really hard to compound and double and double and double. Like if you're holding Apple, you're probably, trying to preserve capital as opposed to, hey, I want to be aggressive with my portfolio, double up every, 5 years, something like that. I think Apple will have its time to shine again. I just don't think it's in the next year. For example, my family, right, we didn't upgrade to the new iPhone this cycle. We're waiting for the next cycle, having this AI built out. I think I think I'm a pretty normal guy, and I think I speak for a lot of the consumer that they're just not impressed with the new iPhone models, and we'll see what happens next year. So, I'd like to buy the stock back. When the P ratio comes down, definitely below 20. Yeah, definitely one of these. Yeah, if you're a long-term investor and you've been holding Apple since the, single digits before all the stock, stock splits, all that. Congrats, hats off to you. If you're sitting on tons of long-term capital gains, it just doesn't make sense. Just hold this one and see what happens. But this might be a rough earnings. There's a lot of negativity out there, so I would expect a lot of companies to have this short positions on this, and then Jerome Powell speaks the day before, so this is just a scary time for Apple and Apple shareholders. Tim Cook's really got to come through, and again, imagine they didn't do the buybacks to all-time highs, right? Their sales were pretty much flat all year. So if they can't come in and sell this new iPhone and let's say sales number fall year over year, man, there might not be a floor in the stock until maybe back in the mid 100s or even I've seen fair value for Apple at priced at 101. So if this thing gets cut in half 50%, man, like I said, it's tough because then if you bought up here, now you're down 50%, the stock's got to double. Stocks like Apple don't just double, in a year. So really tough valuations. Definitely not putting my hard-earned money into this one, but good luck to you. I'm definitely going to be paying attention. I will have another video. I'll probably have a few videos coming out this week, but good luck to all you shareholders out there. Probably the biggest earnings week in 2025, as well as you know the um, the calendar. There's just so much going on this week, so expect a lot of volatility. I think everybody's expecting that for 2025. But this week is going to set the tone. Couple shout outs to Market Watch. They produced this market calendar, so check out Market Watch. Definitely, pay close attention to what's going on in the market. Pay attention to these reports. And then Earnings Whispers, they're on X, and they produce this calendar each week, every time there's earnings. So shout out to both of those companies. They do great work, keep us informed. Thanks for watching. Thanks for staying tuned. I hope everybody out there makes a few bucks. Please like and subscribe and stay tuned for more videos on the market.